Alright, guys. So welcome to this segment of the training. I want to teach you guys something that you guys really need to know. Right. So let's talk about seasonalities. Right. So seasonalities is simply come to equity clock. Click on equity clock. Right. So this is a website where you get seasonality reports. Right. So seasonality is one of um, the methods that you can use to check the funda or at least a sentimental part of the market, right? So it's used to check sentiment, right? And based on the last years, the market is traded by inhuman beings, right? That means human beings have certain characteristics, right? For instance, let's say in the Nigerian market, right? There are goods that tend to sell well during certain periods. For instance, during Easter, we see, those communion materials sell a lot. During the Xmas period, we see, things like clothes, wine, drinks they sell very well during the Christmas period. During the resumption of, secondary schools, we see an increase in the purchase of children drinks like Capri Sun, Chivita, Ribena, all those products they sell well when school is open, like September, when the secondary school is open, right? And books also sell those times. You see people buying textbooks, buying notebooks, all those things, right? So certain products have certain periods when they tend to thrive, right? So that same application is also the same, right, or similar when it comes to the financial market, right? So in the financial market, we have certain seasons when certain things are expected. Now, note this: just because you expect the market to do a certain thing, right, doesn't mean that you have to ignore market structure or you have to ignore fundamental reports, right? This is just a sentimental view, right? It's not the holy grail, right? You have to combine it with whatever you're doing. So if seasonality is bullish, you don't just go and buy because seasonality is bullish. You have to look at the current market structure and see if there's a reason the market should go bullish. It just gives you what the sentimental point of view. Okay, this is what the market does at this time of the year. All right. So normally, that usually there's for instance now cars, right? Cars have the seasons where the prices go up, right? Cars have the seasons where it goes down. There's the time we see a demand for chicken, right? Chicken demand goes up during festive periods like Salah, like Xmas, like Easter, all those festive periods. The demand for chicken goes up because people are, celebrating, they're buying meat and all those things, right? So that is the same thing that happens when it comes to the financial market. For instance, gold, we tend to see gold be bullish in the December period, right? So you have to note that. So whenever it's December, people like to buy gold during those periods, right? So there are certain pairs, even DXY has a certain characteristics it has during a particular time period, right? So that's what you're looking at. So you come to equity clock and then you choose the pair you want. So this is for indices. You can look at indices seasonalities, NASDAQ. You can look at US 30 here. That is Dow Jones, US 30. I can see NASDAQ here. So you can choose NASDAQ, whatever you want. So let us start with the dollar index. All right, so look at commodities here. So if you trade commodities, you can check copper, corn futures, hedgehog, all of other stocks. You can even see gold. Look at gold here. Right, let's start with gold. So this is gold. Let's start with gold since we're already at the commodity section. So since we have gold, we're going to compare gold and the gold charts, right? So we're going to go to the gold chart, SAUSD. All right, so this is gold. Let's use which one should I use now? Let's use forex.com. So let's go to the daily charts. Right. So gold has been super bullish for a while. So looking at gold, let's look at gold. Wow. Let's look at gold from the daily charts. Now, based on seasonalities, we usually see this is a 20-year report, right? So the up, this is the percentage gain, right? This right side is a percentage gain, and then this is the time period over the last 20 years. So this chart was plotted over the last 20 years. All right. So what has gold been doing for the past 20 years? What this chart is about the past 20 years, right? What has gold been doing in the last 20 years? So this chart is on 20 years range, starting from 2013 to 2023, right? So from January 2013 to so this chart was plotted on average, like the last 20 years, and then you can see where the relative movement of price of gold to S&P. So S&P has been going down relative to gold. So that means there's a correlation between this, right? So let's look at that. So that is a monthly average. So the monthly average tells you the percentage return in the last 20 years. So in the last 20 years, looking at this percentage return, we can see that the highest is usually January. That means gold gains the highest in January, right? That means gold goes up the highest in January, right? So yeah, gold goes the highest in January. That means gold goes very bullish. That is between December and January. That's when you see the highest movement of gold. Then max return. That means the biggest percentage that gold has ever moved was in 2020, 2008, right? So gold increased by 14% in 2008. That is the highest in the last 20 years. That means 2008 saw the highest movement of gold, right? And then the lowest movement of gold, or the lowest percentage difference of gold, was in let's check. Okay, I can see it here. So the lowest return was in October. Wow, this is crazy. So October saw the lowest return, 2008. Then the next month, November saw the highest return. Wow, this was a very, very sharp movement. That means something happened at this period. That means for gold to move from minus 18 to plus 14, that means there was a kind of serious event in 2008, right? So maybe you can investigate that, right? Maybe that will be your assignment. Well, if I let that be assignment, so investigate what happened to gold in 2008. Why did gold move so much in 2008, November? So just go and investigate that. So what happened in 2008 that made gold to move so much? Just investigate that, right? So that be your assignment for this class. What's happened in gold that made gold to move in 2008 from minus 18% to plus 14%, right? In between October and November, right? So that is by the way. Now back to the chart. So looking at gold, we can see that we have for the last 20 years we have been on a bullish spree, right? But looking at the chart, we usually see December see some kind of decline. Relatively the months of gold are usually very bullish, right? But this is let us pick some months that tended to show something different. So let us pick September. So September on gold happened to see a kind of drop. So we're going to be looking at September and December. So September usually sees some kind of drop, and then December sees some kind of drop. Let us look at the chart and see what happens in September and December, right? So yeah, let's look at September. So well, for this year, September was not really that bearish, right? So look at September here, right? So since September started, so there was not really bearish movement on this one for this September. I told you guys that it's not always automatic. Let's look at December last year. Right, my God, this is very interesting. Let's look at December this year, or last year, sorry. All right, so look at December here. All right, let's look at December. All right, so this is December. This is the beginning of December. So can you see December here? So this is the beginning of December. Can you see as we hit December, you can see America was a kind of drop, right? Before finally was pushing higher. All right, so let's look at September again. Last look at September here. Can you see September? This is the beginning of September, right here. So you can see September started here. You can see how market dropped in the month of September. So month of September usually see a drop in gold, right? So we saw this market drop, and the market was giving some kind of bearish structure. All right, so we just want to look at another one, December and September. What we're looking at. So let's look for another December. Right. Okay. This December. December did not really move that bearish for this one because the market was relatively bullish. You can see the market structure was bullish. Right? You can see market was making new highs. So you have to always compare market structure. So you can see there was a new high, see higher low, and then higher high. So you always have to compare the structure of the market before saying that the market is bearish. Right? You don't just trade it because you saw that. Right. So in this case here, you can see that September was bearish. Right. Look at it here. You can see how market was dropped. Why did it drop? Because you can see obviously that the market was bearish. You can see lower high, can see lower low. Market was breaking lows. You can see the market was breaking lows. So in that September, you can see market was dropped. Right. So you have to always compare this with the market structure. Right. Look at other flow and other things, not just you sell just because market is bearish. Right. Look at this other flow here. Look at this last bullish move up. Can see our price came, tap into that last bullish push, right? Tap in and then what dropped lower, right? So you have to always compare the market structure. The market had changed from being bearish to bullish. The market was went above the swing higher, so close above, failed to make a new low, and the market was pushing higher, right? So let's look at one final one of December and September, right? So September, I look at December. Yeah, December was in a range, right? There was a range in this particular December because market was kind of bullish. Why do I know? Because I see market close above this high. So market is breaking new highs, right? The market is failing to make lows. That means this December was a different one. It was relatively was bullish, right? So always have to compare the market structure. Don't just trade it like that, right? Don't just trade it like that. Don't just trade it like that. Look at September here. You can see another September. You can September was bearish. Just like in fact, September sees more bearishness. From what I can see. I can see a market came was into this last other block here, right? The market was bearish. You can see a market dropped here, right? So you can see September was bearish because based on what seasonalities, right? So let's look at another particular chart. Let's look at another one. All right, let's look at the dollar index. So dollar index is another one where you have so this dollar index, this US dollar index futures, right? So let's also swap to dollar index as DXY. This is very, very interesting because it gives you what a kind of sentimental view, right? Of course, you have to consider what the market structure, right? You don't just take it because it's all the SY bullish, right? Don't do that, right? Always compare what the market is doing. All right. So let's look at the DXY as well. So let's look for a pattern here. So on DXY, based on this report here, we usually see what the highest gain on DXY so far is usually in the month of okay. I can see that okay 0.4. Okay, 0.4 usually see okay January. Okay, sorry, May. So May usually see the highest increase in DXY during May. So usually see what the monthly average. So the month dollar, the gain frequency, the positive return is on average is usually highest in the month of May, right? Then the max return so far the last 20 years, that's why I saw the highest return in 2008 as well. This is on some 7.8%. And then the lowest drop, all right, so was in the year 2009, right? That was it in May 2009. We saw that was the lowest drop so far on this particular guy, right? That was the lowest drop, right? So the gain frequency, usually see gain frequency very high in the month of February and May, right? So February and May usually see was more frequency where it's more gains very frequent in the month of May. And so let's look at the charts. So in the last 20 years, DXY, that is dollar index, usually see a drop in December. So we're going to look at December. I want to see where the market was bullish. Okay, so the month of May usually sees a bullish market, while December usually sees a bearish market. So let's look at May and December. All right, let's look at May and December. So let's just quickly look at May and December. All right, May and December. All right, so let's look at May and December. So for the month of May. So where was May this year? Let's see what May did this year. So you can see May, obviously, May was very obvious. This is May. So so you can look at May. Although May did not really do that what it usually does, because market was bearish. You can see market was, failed to go above this other block. So market was, if it's failed to go above this highs, then made a new low. So May did not really see bullishness for this year, right? Because of what the market structure, right? So this was a different example. So May was not bullish because it was structure of the market. Remember I told you that you must look at structure. I look at December here, very obvious. Can you see December? Look at December, very nice drop, just like what we usually see. You can see December usually drops, and then May goes what usually was bullish, right? So let's look at another one. So let's look at May again. Let's see if May of last year was different. Right? Look at May of last year. So market was bullish for May. Look at it. Can see May can see very bullish spray. Right. So market failed to do what? To go below this low. And then they made a new high. Market closed above this high. So once market closed above this high, this has been a sign of what? Structure break for you to start taking price was up. So you also have to wait for structure to give you that confirmation before doing anything. I don't know that take buy or sell because you saw seasonalities. Don't do that because you're going to lose a lot of money. But look at this one. Market was bearish. This December, because that market was dropped. Just like very seen in December, right? There was a drop. Although it was a kind of range. That one was a kind of range, but relatively, market was not going up, right? In the kind of range. It was ranging between this high and this low, right? We saw the kind of range during December. So it was kind of a stalemate market. Right, let's look at another May. So let's look at May again. So May. So this beginning of May. Can you see May here? So this May. So May pushed down a bit, but finally pushed higher, and then relatively it's set up for what a bullish push. Right, let me see June. What does June do? Okay, May and then June continues. Okay, continuation and then bullish. The market may drop and then finally what continue. So May June is usually relatively bullish. So May usually sees what a push, then a retracement, and then a push. Right, so that's what happened there. You can see it here: a push, a retracement, and then what a push. Right, that's what happened there. All right, so let's look at December. We're going to look at December and May. December and May. So this is it, December. Can you see December here? So you can see December, how the market was pushed down, right? So December is usually was bearish, and then January also was a bit bearish. So December January usually was a bit bearish. So December January, you can see the market was just, but finally, market kind of broke structure around here. Market closed above this high, then came to retest. So you also have to look at what the market structure is doing. Right? Don't take seasonality without understanding what the market structure fundamentals report are saying. Right? It's very, very important to do that. All right, let's look at one last example for May and December. So let's look at May. So can I see a very good example of May here? All right, look at May. Market was built bearish. So that's why we couldn't buy it because market was giving what was making new lows. Right? When market is making new lows, you don't buy. Wait for market to start breaking hands. May came, market dropped down. There was no buy. Market finally went above this high. So you can see the market giving that bullish spray. So the ending of May was where the bullish move was setting up for a buy. So it doesn't have to be the beginning of May that you will see what you're looking for. Let's look at the last December for this example. So this is the last December I'm looking at. So this is the last December. Look at December here. Right. So you can see December, so you can see what this heavy drop, right? So that is basically how seasonalities work. So you can just play around all these things, understand better, right? If you need to pay, because there are some symbols you cannot look at without paying, right? Let me see the reports. So if you need to pay, so you can have a better understanding of what the market is doing. It's very, very good if you can pay, and then if you can pay to have some function, because some functions are not available without paying, right? So you can see the subscribe button here. I don't know how much they charge. So if you need maybe more functions, more in depth, right? You can always use the paid function, right? But I think that without paying, you're good to go. You're good to go. Right? Without paying, you're still good to go. You can see monthly. You can see this. If you pay, you can see the monthly outlook, chat books, intraday research, all those stuff, right? And it's $24 a month. All right. So if you wish to, you can do that. But for me, I feel that I've seen enough information for free. Unless maybe you just like to know more about fundamental reporter, which I cannot stop. It's good to learn more, right? But if you don't have the money, you can't afford it, you can just stick with the free one, right? So I think that is it. So this one will give you intraday research, chat books, all those things. It gives you a deeper insight of what to do, right? So this is basically how you can use it. Don't forget my assignment. Go to gold and check why gold did what it did in the month of October and November, right? Don't forget that 2008, right? So I will see you guys in tomorrow's class. Please, if you have not subscribed to the channel, please do to subscribe. I would love to see you guys in tomorrow's class. Please do to subscribe to the channel, like this video, share with your friends, and I will see you guys tomorrow. Touch base with you tomorrow. So have a wonderful day. Cheers and God bless.